Hello everyone, this is Ron Finberg from CM Trading. Today's weekly trading analysis, a preview of what's going on this week with a little review of what happened in last week's trading. Let's go straight to what happened last week. The big news last week, there was actually the second item over here. We had ECB Chairman Mario Draghi. He went out and said very, very strong words in a speech he had given that the euro is here to stay. Basically, traders understood that to mean that the ECB was going to be defending the euro, and either whether that means they're going to be doing buybacks, buying bonds, or some sort of quantitative easing, or whatever it is that they're going to be doing, that he was pretty much putting on the stamp that they're going to do what needs to be done to help the EU keep the eurozone going, specifically with Italy and Spain staying full-fledged members of the euro. As a result, we saw the euro spike. It was trading a little bit below 121 and traded up in the course of the week up to above 123 to close the week. It also led to this huge rally, this huge global risk rally. We saw equities across the world flying higher. European ones specifically were a lot higher. And then there was more momentum also in pretty much in commodities. Commodity currencies also did very well as a result. Elsewhere, we had UK GDP numbers that were worse than expected. The consensus over here was about for a drop of 0.2%. We were expecting a 0.2% drop, and they were at negative 0.7%. So a big miss over there for expectations for the GDP. The pound dollar, as expected on such type of news, was had fallen pretty hard. But the important part for traders was that the pound dollar held at its 154.50 support. It had fallen, but nonetheless it found the buyers continue to step up and were buying at this rate over here, which is very important for this coming week. And we'll see a chart in a couple minutes about the pound dollar. The other item over here was gold. There were some stories coming out about gold, but pretty much gold has been not doing much of anything the last couple of months, trading between about the 1530 to 1600 level. It traded back above 1600 last week, and we see demand kind of going back into gold. We'll show a chart of that in a couple moments. This week, okay, so it's not really a specific news item, but big question here the traders are going to be watching are how does the equity market and the debt market in the EU go this week? Are equities going to continue to rally? Are we going to see some profit taking after last week's moves? Are yields that were EU yields, specifically in Spain and Italy, that were holding? I'd seen were doing a little bit better last week. Are they going to return back up to their span, to the highs we saw a week and a half ago? That's definitely one of the more important. That's definitely one of the more important news items that, depending on how the yields in the equity market move, that should have a direct effect on the euro dollar. Next, we got a lot of news coming out on Wednesday. We have 3 items coming out. We have the UK manufacturing PMI. The reason why the PMI, the manufacturing PMI numbers are for this week specifically, they're important every month, but this month they'll be looked upon a lot is because last week's GDP numbers from the UK showed a lagging component. We showed the last week's UK GDP numbers specifically showed that manufacturing was underperforming. So we'll want to see if there's a reverse going on or this underperformance is continuing to take place. Also on Wednesday we get the US's manufacturing PMI, and followed by or along with the ADP employment numbers. Obviously those employment numbers are a prelude to the big story at the end of the week, Friday's US non-farm payrolls. Based on those numbers, traders are really keeping their eyes on these U.S. non-farm payrolls because the U.S. Fed has really gone out of the way to say that they're not applying any new quantitative easing at the moment, even though we've seen employment. These non-farm payroll numbers, as usual, are always very important. Specifically this week, they follow as last month or earlier this month, the U.S. Fed and Bernanke had said that they're not going to be doing any quantitative easing anytime soon. They're really taking like a wait and see, even though the U.S. employment numbers have been pretty soft. So we'll see what happens over there. If the numbers are really terrible again, then that might just cause enough political pressure for the Fed to have to act. If they aren't, then we could. If the U.S. numbers are as expected and don't show any reason for the Fed to really jump on the bandwagon and start doing some QE, then this could be a direct. We could see some dollar strength. Specifically, we could see some strength in the dollar yen as a result. There's been a lot of money going back into the yen, as the Bank of Japan has been standing still. So if we get this belief, if more Forex traders really believe that the Fed is also going to be standing pat, we could see some more demand going back into the dollar yen. Okay, let's look at a couple charts here. So we said last week we saw this huge rally in the second half of the week in the euro dollar. Traded from below 121 up to 123. The key item over here was this 123 resistance level. It traded all the way up to this 123 resistance level, and then it fell back down. You saw it traded up to the level and then fell back down. However, at the end of the week, it actually went ahead and closed above the 123 level. But to start the week today, it's fallen back below this level, which is a little negative for the euro dollar. So looking ahead, we need to see the euro dollar close above again about this 123. If we don't see 123 holding today, then there's a good chance that this will lead to some profit taking and some selling, some additional selling taking place in the euro dollar. Elsewhere, we have the pound dollar. So we mentioned before that it had it had found support at its 154.50 level. This is the chart of the pound dollar. So it's actually been in a pretty tight trading range for the past like 2 months, between 154.50 and 157.50 or 157.75, approximately in that area. It's a lot. But last week's demand that we saw on this bad news is really a positive technical indicator for the pound dollar. So we saw this technical strength in the pound dollar last week. As such, with the demand really holding the pound dollar, if we get some good news out of the UK, specifically on Wednesday's manufacturing PMI numbers, then we could see a breakout occurring in the pound dollar if it can clear 157.50 and hold above that level. Alternatively, if you don't like trading, if you do not like the volatility involved with trading the pound dollar, one way to trade it is just to short the euro pound, where you're taking advantage of the strength of the overall long, 2 month strength of the pound, but minimizing your dollar risk. Okay. Next, we said that gold had traded out. It was traded out this little triangle pattern. Last week, it was we had this longer-term triangle pattern over here. Finally traded out of this. This is a bullish indicator for gold. It's a possible, it's starting to break out as it's traded above 1600. For buyers, we on such a chart pattern, we prefer the long side with stops if it trades back into this triangle. So just to recap what we spoke about today, we said the euro dollar had fallen back below 123, showing that the 123 resistance is pretty strong. If the euro dollar is unable to hold back above 123 today, then we could see continued selling pressure as traders continue to take profits over there. Also, we spoke about the pound dollar. This is probably my favorite trade over here. I really think that if we can finally bust above this 157.50 level, we can see a prolonged breakout occur over here, maybe up to the 160 level. I really liked it how it had this bad news, but it was able to stay above its 154.50 support. Last, we mentioned gold. We had this upside breakout on the triangle pattern as long as this triangle pattern, as long as we're above this triangle pattern, then I continue to favor the upside. One other thing that's helping out gold, forgot to mention, is that there's more inflation talk going on. With part of the reason is that there's been talk about, you know, the EU doing their quantitative easing, and in China and all these, in India, all these countries are going out and trying to add money into the system in order to keep the global economies working. So that increases inflation talk, which is a positive for gold. All right, if anyone has any questions about today's presentation or on trading in general, please feel free to send us a question, an email at dealing@cmtrading.com, or alternatively, you can hit me up at Twitter @Ron Finberg. I want to wish you a wonderful week and good luck with all your trading.